All right, so good evening, everyone. Basically, we have Sani Hamid, the Investment Director of FA Advisory. FA Advisory is a member of Financial Alliance that was founded in Singapore. FA Advisory is the fastest growing and emerging financial advisory firm in Malaysia. Sani Hamid is very much helpful to shed light in regards to the outcome of the FOMC that just took place today. So FOMC has just had this 2 days meeting. The outcome was has just announced by its chairman Jerome Powell. So Sani, could you share with us what is the key takeaways of the meeting just now?
Sure. Okay, so the decision by the FOMC, a 75 basis point hike, did not come as a surprise. That was widely expected by the markets. I think the Federal Reserve has come out to underscore its desire to fight inflation very strongly, saying things like basically effectively it's not an option to fail in doing that. So I think the FOMC has set the stage for, I think, a few other hikes in the future in order to do so. So we're expecting them to continue to hike into the next couple of meetings, probably all the way to about 3.25, maybe even 3.5% by the end of the year. Also being noted is basically Jerome Powell said they don't think that the economy is in a recession, which again would allow them to basically continue to hike without having to worry about slowing down the economy. However, they did say that they're open to now assessing the situation on a case-to-case basis. So that's got the market a bit excited. Because of that, the market thinks that if soft data comes in terms of either inflation or the economy, what we could see basically is we could see the FOMC pivot, meaning to say they could actually start to lower down the rates, interest rates, as opposed to what they're doing now, i.e. tightening rates. So I think the market rallied as a result, and I think the market has actually now started to think, hey, there's a chance that the FOMC may actually start to reduce rates sooner rather than later.
All right, okay. That's a very good explanation in regards to the highlights of what's the outcome all about just now, right? And could you also share with us what it means to the Malaysian market, particularly to the investors here in Malaysia?
As we saw, both equity markets and especially risky markets like the Nasdaq rising, it does give some kind of feel-good factor to the rest of the markets across the region, across the world. However, having said that, I think there remains a lot of challenges that lie ahead. We must remember that basically the global economies are slowing down, ranging from Europe to China to US and even to here in Southeast Asia. We are seeing signs of a global slowdown. With that, we potentially have stresses on what we call corporate earnings. We would have stresses in terms of sovereign debt, corporate debt, and so on. So I think the second half of the year presents its unique challenges. While I think people can start to nibble and pick up what we call very good stocks that have fallen a lot, I think the best strategy again is to adopt something called dollar cost averaging. That will help to take away some of the riskiness and some of the volatility of versus going in one lump sum where you potentially could suffer relatively large losses if the markets come down. So dollar cost averaging is our recommendation for clients actually probably in the second half of this year in order to take away some of that riskiness and also a potential sharp downturn if it does happen.
All right, wonderful. Thank you so much. So the strategy to go about it for the investors would be to dollar cost average their whatever equities that they have invested, yeah?
Exactly, yes.
Okay, and I also noticed that with regards to when you mentioned about the markets, right, there's this additional question about Nasdaq and also cryptocurrency has been rising up very sharply. Why is that so? And what does it mean actually?
Well, those are the riskiest among the so-called assets that we have, meaning to say that in the whole spectrum of asset classes, you'll find that growth stocks, i.e. Nasdaq stocks, IT stocks, tech stocks, and also cryptos are considered to be on the far end of the risk spectrum, i.e. they're highly risky. They've been sold down a lot. Some of them have fallen 50, 60, 70, some even 80, 90%. So what we're seeing is a kind of like a relief rally where as the Fed raises rates aggressively, that rate cycle that we're in, or the rate cycle that we're in today, probably is reaching the end of the cycle. So I think these stocks tend to be quite happy when interest rates don't go higher, because as interest rates go higher, it tends to affect the more risky part of the asset markets. So I think they're cheering that, albeit again, I have to emphasize that going ahead, as we have an economic slowdown, as we have defaults, as we have what we call pressure on currencies and such, it's a whole myriad of challenges that lie ahead. So I think investors should take it easy. Go in if you need to, pick up good stocks which have good fundamentals, but at the same time, don't take on too much risk too fast and too aggressively.
Okay, all right. Thank you very much. So basically select wisely in to weather the losses, or maybe to weather the riskiness.
Volatility, yes.
Yeah, the volatility. Yeah. All right. So that's basically what we would like to hear from you with regards to the outcome of the FOMC today. Thank you so much, Sunny, for spending the time. And
Thank you for having me.
yes, thank you so much. Okay then. Thank you.